You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Options Bootcamp is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA. From the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges, we exemplify customer focus, consistent technology, and streamlined solutions. NASDAQ, tech forward, leading the U.S. options market and continually rewriting tomorrow. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors, Mark Longo, Dan Passarelli, and Jill Malandrino.
All right, everybody. That music means it is time once again for, I know, a lot of your favorite program. Yep, it's Options Bootcamp. Pinch yourself. You're not dreaming. It's back. It's back. You guys have been bugging us. You've been haranguing us. I know you like the archives. You've been digging deep into the archives. In fact, all of our archives going back 13 plus years now here on the network. You guys have certainly been making use of those, as most of us, if not all of us, are pretty much stuck at home and also a little bit worried about these markets. So those archives coming in handy. And a lot of you diving into the option space for the first time, checking out Options Bootcamp. We welcome all of you. And for all of you long-timers who've wanted more episodes, we're happy to have them coming back at you. I am Mark Longo, of course, from theoptionsinsider.com, as well as from the ever-exciting, ever-informative, we hope, these days for you, Options Insider Radio Network. I'm joined once again by my cohort in the land of all things bootcamp, my fellow drill instructor, the black-hatted one himself, Mr. Dan Passarelli from Market Taker Mentoring. Mr. P, welcome back to the show. Do you have your black hat and indeed your whistle, sir?
I do, and black face mask, too.
That's true. Yeah, a little bit of an addendum to our equipment these days. I'm wearing a face mask as we speak, just because I don't trust you not to send the germs over the airwaves here, Mr. P. Luckily, there's no video in the studio right now. It would scare the heck out of everybody. It looks like I'm robbing a bank. And also joining us, holding down the NASDAQ hot seat today, Miss Malandrino. She's busy doing the NASDAQ content over there, but we have an able substitute filling in over there, Mr. Tony ZHANG, the chief strategist over there at OptionsPlay. Tony, welcome back to the Options Bootcamp Drill Instructor Training Ground. It has been too long, sir.
Thank you so much. It's been a full 30 minutes since I've joined with you, so I'm really glad to be back answering some questions that clients have regarding how to trade these markets. It's a tough time. I'm glad to share some insights. All
right, you mentioned it. Let's get to it with a special pandemic-themed episode. Going to walk you guys off the ledge a little bit with this very special mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, so festive. I love it. I'm waving my sparklers here as we speak, listeners. Of course, mail call time. Time for you guys to take the reins. You have a lot of questions. Go figure. I think we all do these days. We'll try to answer as many as we can here on the show. Sometimes I love just the simple ones. bring a smile to my face. This one kind of brought a smile to my face out here as well. This just comes from Joe. Joe wants to know, why are we rallying? Not exactly an options question, Joe, but I'll let it slide because it brought a smile to my face out here. Of course, we're not rallying today as we're recording this today. Listeners out there on good old tax day, what used to be tax day, most of the major indices selling off about anywhere from 1.5% to a little over 2% out there. So not rallying today, but I get where he's coming from. We have been rallying of late. So, Mr. P, I'm going to put you in the hot seat. You have to answer for the broad economy here. Joe demands it. Why the heck have we been rallying over the last few weeks, sir?
Well, I mean, I think that the selling got a little bit overdone for the amount of information we had a few weeks ago or whatever it's been now. And then, you start getting a little bit of good news and people get optimistic and, I think that's where some of the buying came from. But, another thing, too, is we try to use history as a guide always, right? Anytime with anything in the market, I mean, anybody who reads a chart, you're trying to use history as a guide. And in the past, we've seen these V-shaped recoveries in these sort of situations. So nobody wants to get left out of that big, powerful rally. But, my opinion is I'm not going to go as far as saying it's different this time because you can always learn a whole bunch from history, but it's a little different this time.
All right, so there you go, Joe. I just put that in there because I thought it was a fun question. We'll get into some of the more options-centric, I know a lot of you have out there. Let's get into some. I've got comments here as well. People just like to vent as well. I get it. These are crazy times. We're here for you. The next big short. I like that handle. He commented on selling puts. He says, selling puts is a dangerous game in this environment. I'm waiting for the price to come in and then find support. That way I'll get more for the risk I'm taking, and it will be defined against the lows. Only fools sell puts at the top of a Momo run. I'm assuming he means momentum there. And when plenty of premium has bled out, you probably told listeners that too. He also asks a caveat there at the end. He said, I'm pretty busy during market hours. Are your shows only available live? Let me answer that last part first. No. First off, I love this. We've been doing this for 13 years, but we love all the new people discovering the network all the time, including, obviously, in these crazy environments. Sounds like Next Big Short is one of those. Obviously, we do a lot of live stuff, including this, but not all of our shows are live for a variety of reasons, compliance, logistics, others. And, of course, everything is available on demand. The network was born. We kind of created the first options podcast well over 13 years ago. And so that was the genesis of all of this. Mr. or Mrs. Next Big Short out there. The live is a very recent addition. It's kind of a much smaller, more little fun pilot for the hardcores out there who like to get it instantly. But yeah, the vast majority of you I know like to consume it on demand, so it is all available. You can subscribe just to Options Bootcamp or indeed to the full network. I recommend the latter because we'll definitely keep you busy and keep you informed. There's about a dozen different programs popping off out there all the time. And you guys certainly have time and a little bit of an inclination to consume that content. So if you haven't done so already, Mr. and Mrs. Next Big Short, we welcome you to subscribe to this show, but I recommend you subscribe to the full network. That way you don't miss out on anything. Tony, you've been talking a lot about selling puts out here. What do you have to say for what our friend here, the Next Big Short, says that this is selling puts is a dangerous game in this environment, Tony?
So the way we think about selling shorts is not, selling puts is that it's not an option strategy. It's really a stock strategy. And selling puts is just a way for you to acquire the shares that you want to own with a discount through the premium that you receive from the put option. So, and he's absolutely right in terms of that you don't want to chase a trade as it goes higher, especially when you have this momentum run, as he refers to. You generally want to wait for the stocks to decline a bit near a support level. That's generally when you want to time selling your put options. So yes, there is a bit of a component of utilizing the higher implied volatility when a stock declines. And that's really some of the benefit of selling puts. But you can really maximize it by including technical analysis as part of it so that you time that correctly near a support level. You have a higher probability of a bounce so that you're able to take advantage of that higher premium. So I think he hits it on the nail as far as the ways how you want to go about utilizing a short put in this particular environment.
Yeah, we said that before. I know Dan's a big fan of that strategy as well. If you're going to be selling puts, make sure you're comfortable with the level of the strike price, acquiring that underlying there. Because there's a good chance in this market you might be able to. Mr. P, is that still your philosophy over there at MTM? If you're going to sell puts, make sure you're comfortable picking up the stock at that level, sir?
Yeah, I mean, part of this depends on your time horizon. I mean, if you're a day trader, it's pretty dicey, selling puts, if you're not going to go home with a position overnight. But I mean, if you're willing to be in it for the long run, I mean, the only thing that's dangerous about selling puts in this market is if you don't get assigned and you miss out on a bunch of upside. I mean, I sold a ton of puts over the last 6 weeks or whatever it's been, and for the purpose of getting assigned, which I did, and I was able to pick up that stock. I wanted to buy it that day at that time, but because I sold puts, I ended up buying it at a lower price because of all that really, really rich premium. So it's not a matter of perspective. It's a matter of objective.
And well said. So I know you like to always differentiate between your traders and your investors. And this is a strategy that can be utilized by both as long as they realize just what they're getting into. Speaking of getting into, we got to get into more of your questions. Already almost halfway through the show. We've only barely scratched the surface here. Let's hold off on the earnings straddle. So let's get into some more of the tactical stuff here. Oh, here's an interesting one. L76. What matters more when trading weekly options? Gamma or Vega? Now, if you're confused by those terms, listeners, Gamma or Vega, not sure what the heck we're talking about, I encourage you, check out the very early episodes, the Primordial Ooze episodes of Options Bootcamp, going back many years now, where Dan and I and many others have been quite a cavalcade of stars have joined us on this program over the years. Break down all the Greeks, your deltas, your gammas, your thetas, your vegas. You can get beyond. We won't confuse you with the extra ones right now. But if you're not certain what he's talking about there, then certainly a little bit of a refresher in order very quickly. Of course, Gamma going to be the rate of change of your deltas, because it's going to show you a little bit of your directional exposure to the market right now, how exposed you are to big swings in the marketplace. Vega going to be your volatility component, your volatility Greek out there. Mr. P, since you quite literally wrote a book all about this stuff, Trading Options Greeks, I will start with you, sir. Because obviously you like yourself some weeklies. Everyone who's trading equity options these days loves the weeklies, whether it's to buy or mostly to harvest these days. When you're trading weekly options, what to you is the biggest concern? Is it the Gamma or the Vega, sir?
Well, I mean, I would say, if the question is I have to pick between one of those two, it still depends on what position it is. I mean, with weeklies, the most important thing by far is the delta, and then the next most important thing is the theta, and then the other two are kind of tertiary because options with less than a week until expiration have pretty small vegas, and gammas is like a second tier Greek to begin with, so it's less relevant than the other two. I don't know. I mean, it depends on the position. If you're at the money selling, if you're selling at the money options, maybe Gamma. I don't know.
Yeah, this is an interesting one. It's certainly a subjective one, which is kind of fun. I think if you ask 5 different people, you might get 5 different answers out there. I think the theta one is a good one to throw out there, because a lot of people are harvesting in the weekly spectrum. So, of course, Gamma and Theta, 2 different sides of the same coin. You have a high Gamma, you're going to have a high Theta, and vice versa. So if you're trading a lot of Gamma, Theta's a big one, and vice versa. If you're trading Theta, which a lot of you are, you got to pay attention to your Gamma. So I would definitely throw that caveat out there as well. You can't really omit Theta from this conversation. And, of course, as Dan mentioned, Delta, there's a lot of directional risk out there when you're trading weeklies. Tony, I'm sure you get questions along this theme, maybe not this exact question, but along this theme all the time over there at Options Play. What do you have to say for L and everyone else out there who may be wondering about this similar type of question?
So I think this is a really great question, and I'm presuming that when she's referring to weekly options, she's referring to trading an option that's about to expire in a week, rather than just the term weekly options. But we do a lot of back testing of strategies, and one of the things that we, especially when you're selling options, we generally try to avoid holding the options in the last week or so because of the Gamma risk. So I would argue that Gamma is one of the most important I would say Greeks if you're trading an option that's about to expire, especially if it's close to the money, because that's truly where a lot of your risk is. So we usually tell, users who are selling credit spreads, we're selling 45 days out, roughly 2 weeks before expiration. Roll that if you want to continue holding on to that exposure, but don't hold it in the last couple of weeks because the gamma exposure in the last 2 weeks gets extremely elevated, especially as you approach expiration. So, great things to think about in terms of delta and theta, certainly very important, but I think gamma exposure is the thing that kind of comes out of left field. A lot of people don't realize when they're selling these short-dated options.
Yeah, it's worth considering out there. There's a reason, listeners, when I do shows like TWIFO and others, when we're analyzing volatility skew and things like that across a broad spectrum of options, we don't go beyond 2 weeks because at that point, it's pretty much all gamma. There really is no volatility. So it's kind of a bit of a misnomer to even really ask VEGA versus gamma, because in the weeklies, you're not really getting a lot, if any, VEGA, really. It's really mostly gamma, and the flip side of that, theta, and of course, directional exposure, which is delta. So it's kind of a loaded question. It's pretty much going to be gamma. But if you're talking farther out, like we had a question earlier on the last show about stock substitution, then you're talking about a lot of VEGA because you're going out into the leaps. That's kind of where VEGA lives. So that is a very different beast, and there's not much gamma and a lot of VEGA. But yeah, you're talking the weeklies. Gamma is going to pretty much be your king, and of course, its flip side, its counterpart out there, talking theta. All right, Tony, you're our duly appointed representative in the NASDAQ hot seats. I think you are legally obligated to have to answer this next question. This comes from Drake. Drake wants to know, he says, I'm confused. He says, what's the difference between the NDX, which are, of course, the NASDAQ 100 options out there, listeners, and the NDXP? A little bit of perhaps symbol panic out there. Tony, are you a big NDX guy, A? I'm assuming because you're sitting in the NASDAQ hot seat, you must like yourself a little bit of NDX. And then B, what do you have to say here for our friend Drake, who's confused by the different symbols?
Yeah, Drake has a really great question because when you look at the NDX chain, you see NDX and you see NDXP. So the difference is that the NDX, which are the monthly options that expire on the third Friday of every single month, those are actually AM settled, which means that they actually settle based on Friday morning's opening price as opposed to Friday afternoon's closing price. So for those that trade futures, they're used to trading the AM settlements. But for most equity options traders or people who trade other index options like SPX, they're many times used to the PM settlement, the options that expire based on the Friday's close. So NDXP was basically built to basically replicate what equity options traders are used to, which is getting the PM settlement. So every single weekly option that expire on Monday, Wednesday, and Friday are going to be PM settlement under NDXP, and the only AM settlement that's left are the monthly options that NDX trade under, which is only on the third Friday of every single month that settle based on the AM opening price.
There you go. NASDAQ tapped the right person to sit in their seat. But yes, AM and PM gets a little bit confusing. People are certainly used to one, and then when they encounter the other for the first time, it could be a bit of a rude awake. What do you mean my options are already gone? What's going on? Or they haven't gone yet, depending on which side you're used to. We get those questions quite a bit. So I'm glad to see Drake. Drake is asking that one here. Next up, we've got THOM. Maybe a short Tom. Let's go with THOM. It sounds more fun. THOM wants to know, thank you for your great options bootcamp, bro. Well, thank you, THOM. Right back at you. He says, I've been devouring all the episodes. I really want to trade options now, but I'm scared by these markets. I was looking at some puts yesterday, and they I think it means they were nearly $2 wide for a 2-week 5% out of the money put. I didn't really know what to do with that market. Trading on either the bid or the offer looked like a sure loser. Do you guys have any tips for trading in these especially volatile and wide markets? Thanks again for the show and the whole network. Keeping me sane in my house right now. Well, we're very happy to help there, Mr. or Mrs. THOM. Hope to talk you off the ledge, give you something to listen to. Hopefully you'll learn a little bit from, maybe just calm you down in these somewhat unprecedented times that we all find ourselves in. And we're all kind of stuck at home. Maybe you're spending a little bit more quality time with the family than you ever intended. We can help with that as well. Go in the room, turn on a podcast or two, or a live stream, whatever floats your boat, and hopefully saner, cooler, calmer heads will prevail. Maybe you'll learn a thing or two as well out there. Now, this is a very common refrain. We've been getting this a lot, not just on this show, but pretty much every show on the network right now. We've been talking about it. Tony touched on it on the last episode. We've had Henry Schwartz from Trade Alert on here talking about it. Matt Amberson from ORATS breaking down the data of just how extremely illiquid most of the major names out there are right now. We've had people writing in, showing us markets. Look at these displays here. You mentioned $2 wide. You don't say which underlying you're trading here, THOM, but that's not an uncommon market to be seeing. And particularly once you get outside of the top 50 or 100 names, most people like to trade. If it's a pretty illiquid name on a regular day, in these markets, it's going to be even more liquid, so you're going to see those markets reflective. You have people write in showing us examples. I think VXX was a recent one. We were talking about where the bid spread was so wide, it was really a loser no matter which way you traded. If you sold it on the bid, you lost money because the underlying moved. If you bought it on the offer, the underlying didn't move a lot. You lost money because the vol came in. It was an egregious level of volatility to buy. So either way, we're with you, Thom. This is a challenging market. That's why we have shows like this, to help you navigate these kind of things. Maybe, Tony, we'll start with you because you were just talking about liquidity earlier here and what a challenge it is right now. Maybe let's start. Why don't you reiterate those stats for our listeners who maybe missed the last episode of how many names you consider to be quote-unquote liquid and viable right now for a lot of the players out there. And then B, because we're in these crazy, unprecedented environments, how are you counseling people to approach their trading to avoid getting run over in these crazy markets?
Yeah, I think this is a fantastic question, especially in these type of market environments. So one of the things that we track here at optionsplay.com is a liquidity tracker. We track every single day, twice a day. We look at the bid-ask spreads of all optionable symbols, and we try to get a sense for which symbols are most liquid, which symbols are not very liquid, and which ones we stay away from. You know, with 4,000 optionable symbols out there, normally that list is about 400 names that we would trade options on. Right now, that list is only about 180 names, of which about 100 of them are what we consider very liquid, meaning we should be able to get in and out very quickly at the midpoint, and about 80 names that are somewhat liquid. And a lot of the big names that we're normally seeing in the very liquid names are just not even on the board at all, just because of high bid-ask spreads. And this is a stat that has improved little by little over the last few weeks, because during the peak of the sell-off, this list was only 55 names. So liquidity is a very big thing that we look at here. We actually start our day by looking at which symbols are even on that list. Anything outside of the list, we're not even touching. We're not even trying to bring up a chart and trying to determine directional view, because there's no point in trading those options. So that's really some of the things that we're predominantly looking at. But the other thing is, even if you see sometimes wide bid-ask spreads, which we see a lot of times, don't be afraid of placing an order at the midpoint and trying to see if you can get filled at the midpoint. Maybe move your option orders out by about 5 cents, 10 cents, but we generally don't move our orders very far from the midpoint. That's one of the ways to mitigate the large bid-ask spreads that we see.
Are you seeing market makers being willing to step up and fill you? Because when we have a lot of reports from our listeners that's a bit of a dicey prospect in these markets.
I haven't had any issues, even getting filled at the midpoint, especially in these volatile times. I'm happy to hear what other people's experience have been, but I trade at Thinkorswim, and I have not had any problems getting orders filled at the midpoint. But I have been sticking to these very liquid names that I've only been trading.
That's a good point with saying liquidity. I'm surprised your liquid names list is as big as it is, 50-odd names. That's surprisingly large for these crazy, turbulent times that we find ourselves in. And Dan, same question for you. I'm sure a lot of your mentees are coming to you saying, hey, I want to sell puts or buy calls or do whatever it might be, maybe time spreads, but these crazy spreads are just killing me. What are you telling people out there right now, sir?
Yeah, just to piggyback off Tony a little bit, the names where you can get filled mid-market, I mean, it's okay to trade those, even if it is wide, trading at least close to the middle of the market. Me, usually, if I'm selling, I'll sell just a tiny bit below the middle, buy a tiny bit above the middle. So I think those names are great because you often can get filled, but definitely, just agreeing 100% with Tony, definitely avoid the ones that are really illiquid where you have to hit the bid or take the offer, because once you get in, if you feel like you got in at a good price, it's going to be tough getting out.
All right, let's see if we can Run up against it here. We have so many questions. See if I can find some quick ones that we could hit off here really quickly. Here's just a little bit of love from Tom. Tom says, great YouTube content. You deserve more subscribers. Well, yeah, like I mentioned on the last show there, Tom, we a lot of you guys love the YouTube, which surprised me because like I said, I forgot until recently that we even had one. We don't really, it's not our intended way for the content to go out. It goes out usually via mostly audio platforms like, of course, your iTunes and your Stitchers and your Spotify, as well as our website. A lot of you guys like it there as well. And of course, social media. You can stream our stuff from anywhere, including our app. But part of that also is YouTube. And YouTube, a lot of the use case for YouTube these days is listening, is audio oriented. So a lot of you are enjoying it. If you enjoy it that way, who am I to judge? Keep it up. Glad you guys love it. And Tom has not really been the thing we've been promoting, but now that so many of you love it, maybe we will. Maybe we'll get out there more, people know, so that if they want to get it that way, because it sounds like a lot of you do, we'll start talking about it more and promoting it more, so more people will be able to get it. All right, let's see if we can squeeze in. Oh, these are also epic. Let's go for, all right, let's do a one that could be epic, but we'll do a quick kind of lightning round on this one. We'll wrap up here with, I just like this handle, Vandango. Vandango wants to know, is it true that most pro traders short volatility? Well, this is a short question, but there's many layers to this onion that we could peel. We were talking about before, Vega versus Gamma. A lot of people are harvesting the premium out there. And of course, that involves being short Gamma and indeed short vol. But are they really selling vol? I mean, they are, but it's a very subjective question when they're out there looking to harvest and get a lot of their main focus is theta and gamma. And then, of course, you have pros who will buy options too. It's not an unheard of thing. So there's a lot to unpack here. We could spend hours on this. Instead, we're going to do a quick lightning round instead. So, Tony, we'll start with you. What do you have to say for Vandango, who wants to know? Most pros, that's another subjective term, pro. What's a pro? Who knows? Is it a super high-end retail? Is it a guy on an institutional dispersion desk? Is it somewhere in between? A lot of subjective layers to this question. But, Tony, Vandango wants to know, is it true that most pro traders short volatility? Yes or no, sir?
I think this is one of the questions where it looks like it's really short, but if you really try to unpack it, it's a lot to get into. But the reality is, I think what he's trying to get at, the short answer is yes. But the long answer is the fact that when we call pro traders short volatility, they're generally speaking not necessarily short. Their thesis is not they believe volatility is going to go lower. They're generally short theta, so they're short premium. They also happen to be short volatility as a result of that, but I don't believe that that's necessarily their predominant strategy they're going for. If you truly want to short volatility, you want to short strategies like straddles or even some over-the-counter products. So that's the short answer to all of that.
Yeah, that's kind of what I was alluding to. They're not out there, shorting delta neutral straddles to look at the harvest pure volatility. If you ask most of these guys who are out there to harvest the theta what level of implied vol they're selling, half of them probably wouldn't even know. So they are technically short vol, but it's not exactly like you said, their prime motivation out there. Mr. Dan, same question for you, sir, before we wrap up.
First of all, I'll just say I don't really know the answer. I wonder if somebody like Henry Schwartz, who's like tears really deep into the data might know an actual answer. But I would say the answer is probably the opposite of what intuition tells you. I would bet that the answer is no. I mean, first of all, there's tons of professional traders who have long vol only strategies, and some short vol only. But the fact that implied volatility in general overall in the options market since like 1987 has been overpriced. If you look back, and there's tons of data and studies, and any professional trader will tell you that. If volatility has been overpriced, that means there's more buyers than sellers from fair value, right? I mean, that kind of makes sense to me. But it is an interesting question.
Or that's why they are predominantly short vol, is because of the fact that implied volatility tends to be overstates realized volatility. Yeah, so, but hey, that's what makes a market, right?
Yeah. But I mean, the question is, how does it get that way, right? I mean, the only way something gets expensive is if there's demand from buyers.
Yeah, I completely agree.
Institutionally, look at the S&P, right? People are buying puts and selling calls. They're doing both. That's why the skew exists in that shape. So that's why it is a very deceptively short question, but the actual question itself, we could debate it for many hours. Unfortunately, That music means we have to cut that debate short. Hope you guys are liking these shorter, bite-sized, more immediate options boot camps. You can get them on your feeds and in your ear holes a lot faster than we used to, because you guys need a lot of content right now, and there's a lot of crazy stuff going on in the market. So if you have questions like a lot of our listeners do, I know a lot of you do, we only barely scratched the surface. Doesn't mean you can't send them in. Keep them coming. If you want to hit the live, we like to bump the live up to the top of the list. So if you use the live, it's a little bit of a bonus for you there listening to the live chat. But before we go, let's go back around the horn. Let's start with Mr. Tony. Tony, if I'm looking to maybe try out some of these back tests you alluded to, or perhaps they want to just kick the tires on the Options Play platform, where should they go? What should they do?
Yeah, you can just go directly to optionsplay.com. You get a free 30-day trial to our platform. You get access to the liquidity reports that I'm referring to, options education, and daily trade ideas, all available to you free of charge at optionsplay.com for 30 days.
There you go. Optionsplay.com is the place to go. And last but not least, Mr. Passarelli, sir, if folks are intrigued, and who doesn't need a little hand-holding, a little mentoring in markets like these, where should they go? What should they do, sir?
Yeah, a little bit ago, I wrote an ebook, 5 Strategies for Volatile Markets, and there's been obviously a lot of interest in that lately, and you can get a free copy of it, actually, by going to markettaker.com/5, markettaker.com/5.
There you go. And if you have questions about their various venues or exchanges, perhaps what's going on, how is this coronavirus is impacting the market right now, it's probably a question a lot of you have, NASDAQ.com. Of course, the place to go. Kick the tires and light the fires. Check out all the information they have over there for you. And on behalf of Tony and the black-hatted one, Mr. Passarelli, and our friends over there at NASDAQ, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in so many great questions. Keep them coming. We love to hear from you guys. And we'll see you back here next time for more Options Bootcamp.
Options Bootcamp is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA. From the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges, we exemplify customer focus, consistent technology, and streamlined solutions. NASDAQ, tech forward, leading the U.S. options market and continually rewriting tomorrow. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.